This is big.
In this video, we're going to look at FTX and Alameda Research and all of the facts we know up until this point. What is FTX? FTX is a centralized exchange that allows retail traders and institutional investors to trade cryptocurrencies.
I'm not an expert, and I don't need to be. With FTX, I have everything I need to buy, sell, and trade crypto safely.
Alameda Research is the sister company of FTX, and the reason why I say sister is because they are a hedge fund that was started by the founders of FTX. Who are the key players in this story?
Hi, my name is Sam, and this is my story.
Sam Bankman-Fried, Sam Trabucco, and Caroline Ellison, they are the founders of FTX and Alameda Research. Outside of the key players, I think as we start to see the news unravel, is major institutional investors. Sequoia Capital, a huge investment fund of pension funds. They were also involved in FTX as a provider of capital. They sent it out to their people that they're going to mark it down to zero. I don't think we've even seen the tip of the iceberg yet because we haven't opened the books based on the bankruptcy proceedings. So what started this cascade of events was actually regarding the FTT token. And what happens in crypto is companies, they mint their own tokens in order to provide them as value to investors, collateral to other companies to raise capital, or to actually have it traded on the open market. And hopefully those tokens, just like a stock or an equity, will go up in value. FTT was going out there and they were minting tokens left and right, guaranteeing these tokens to so many different institutional investors and individual investors in order to raise capital for their company. Okay, I'm just gonna do it the way I know how to do it then. The way I explain it to my husband, which he's like, you're a crazy person when you get all like crazy. I have been advised to say allegedly what FTX and Alameda Research actually did to people. And you know what? They stole. What they did was wrong and evil. And when all the facts come out, you're gonna see how deep and heartless and soulless these people over at FTX and Alameda Research were. I hope it comes out where these people, they get what's coming to them.
It's what matters the most in the end is how we can give back.
I have friends that were wrecked, absolutely wrecked, life savings gone, 6 figures, 8 figures, whatever you have it be. Even a gentleman that we're crypto Twitter friends from Pakistan, $1,200. That was half of his life savings gone in an instant because these people, one, were taking funds from FTX. SBF had built a backdoor protocol and allowed Alameda Research to drain those funds from investors. Alameda traded them on the open market. And you know what the result was? Alameda sucked at trading.
We tend not to have things like stop losses.
Caroline Ellison, you suck at trading. Use a freaking stop loss. This does not only affect a lot of the individual traders that I've been fortunate enough to become friends with on crypto Twitter. The Ontario Teachers Pension Fund invested $85 million in FTX. We don't even know if they're going to see any of that money. Poor teachers in freezing cold Canada. Their pension is going to be affected because of all the deceit that SBF and his team decided to commit, the fraud that they decided to commit on the average person. And one of the very unfortunate parts is that SBF and his team were considered the whiz kids of trading. They were considered amazing business people.
Absolutely could pull it off without my math degree. Use very little math.
Even though they actually had no background in business, they were lifted up to be the chosen ones, these golden children that somehow figured out and had an edge over the markets. They knew what they were doing. And one of the telltale signs was that there was such a lag time on the exchange, meaning that people could get stopped out, they could get liquidated, their orders were being filled, weren't being filled at the correct times or when price wicked. And I think what happened is people started realizing that it wasn't their internet, it wasn't their computer, it literally was them stop hunting or actually just liquidating people in order to keep those funds unfairly on the exchange. And talking about keeping the money on the exchange, what happened is FTX was actually going out there and they were actually giving people bonuses for keeping their money on the exchange. They were telling people and investors that, hey, if you keep your money on the exchange, we're going to reward you even more. They even strong-armed their employees for keeping the money on the exchange. They were offering them matches of 6 figures if they kept their hard-earned money, kind of like a retirement plan that if they kept their money in the FTX exchange, exchange, their own employees would get a six-figure match. And many people took them up on that offer. There are so many messages from people who are FTX employees, Alameda employees, where they are completely wrecked. They have no funds left because they treated FTX like that trustworthy bank that they were basically sold. What really happened? I'm sure a lot of you who don't follow crypto Twitter as enthusiastically as I do actually know what started this whole entire debacle. It was a tweet that was sent out by CZ, the founder of Binance, one of the largest exchanges in the world. The tweet was just a simple, hey, we're going to start liquidating our FTT tokens. What was interesting is that kind of piqued people's interest because they didn't realize that one, Binance had a couple $2 billion in FTT tokens. Two, they also didn't realize that it would kind of be this crypto Twitter fight between CZ and some of the people at FTX. But what's interesting, and this is where people started getting suspect, is that Caroline Ellison, the CEO of Alameda Research, tweeted directly back to CZ on Twitter, hey, we would be more than happy to buy your tokens at $22. This kind of sent little vibrations through the crypto Twitter community. Why would it be $22? Why would they buy this much? Why would CZ start liquidating? And this honestly started a cascade of people starting getting worried about, hey, is FTX books, are they up to date? Are they solvent? There was all this chatter going back and forth on crypto Twitter over what was happening between CZ and SBF. And SBF comes out and he specifically says, don't worry, all of your funds are safe. Now, in hindsight, think about how ridiculous that sounds, that he could lie that bold-facedly to every single person out there. Even his own mother he was lying to. Everybody's funds were safe. If somebody says, don't worry, I've got your back, I've got your money, it's safe, what is the first thing you're probably going to think? Oh, heck no, it is not safe. And that is exactly what happened. People started withdrawing, they started freaking out. Some people were still willing to give SBF the benefit of the doubt. BitDAO comes out, calls out FTX and Alameda and Caroline Ellison and says, are you dumping on us? Are you dumping our token? Because we had a 3-year agreement that we would hold FTT tokens, you would hold BitDAO tokens, and we would not sell. We are not at that 3-year agreement yet. And so because of that, it started unraveling very, very quickly. There was a bank run on FTX, if you will, which means many people go to withdraw their funds. Eventually, they were out of funds. This bank run on FTX was one of the largest on an institution and the largest on an exchange, because this is the second largest exchange in the world. What happened is comparable to the 1920s when you saw the Great Depression. You know, stock market crashed, every single person ran to get their money from the bank. They did not have enough funds to actually back people because the bank had invested their money on the stock market. And so because of that, all the people were actually left without any withdrawals. And this is exactly what happened within FTX. The people and the fallout from it, at first, we thought, hey, this is just an exchange failure. This happens. Celsius did that. Voyager did that. BlockFi, Terra Luna, 3AC. A lot of people actually ended up failing within this space within a year, and you could not withdraw funds from it. Because of that, there was a lot of failures in crypto. So everyone thought this might be normal, except this is FTX. They were untouchable. This is SBF. He is the golden child. He's been asked to Washington, D.C. to testify on regulation. Gary Gensler likes this guy. Institutions like this guy. The common person was actually thinking, hey, I saw Tom Brady and Giselle on a commercial, so I should be able to invest a little bit of a bag on this exchange. The US exchange at this point, for what people knew, was actually safe. But there were traders all over the world and investors all over the world that could not withdraw 1 cent. So at this point, everybody's accounts are frozen, and people start questioning, what were some of the warning signs that were out there?
This doesn't make much sense, but I'll have my team do some work. We did some work and we sent him a 2-page deck. And we said, here are our recommendations for taking the next step. One was the formation of a board. The second was the creation of dual class stock. The third was some reps and warranties around affiliated transactions and related party transactions. And the person that worked there called us back and literally, I'm not kidding you, said, go fuck yourself.
Like, was there anything that we could have detected, anybody else could have detected? There were actually quite a few people on crypto Twitter that were calling out SBF for shady practices. You can go on there, you can search under there, and you're going to find a lot of different people who were able to credibly provide some facts over why SBF's business dealings were super shady. What's interesting is that a lot of people started questioning at the time when all the accounts were frozen, what were the warning signs? How were we going to be able to pick up after the second largest exchange in the cryptoverse failed? Well, it's interesting because as information is coming out, there are major investors in the crypto space that SBF approached asking for billions in either partnerships or equity within their company. Elon Musk actually came out and said SBF set off his BS meter and he did not invest with him because he just didn't find him very credible. Another warning sign is Caroline Ellison. This message goes to you, Caroline. You are a terrible human being because you have set back women for decades. I know there's a lot of talk out there about looks and people are making jokes about appearances and everything like that. I could care less about those appearances. Do you know what I care about? The next woman CEO of a hedge fund in crypto is going to go through hell because of all the things that you did. In my humble opinion, this is worse than Elizabeth Holmes at Theranos. And the reason being is, hey, she had a lot of institutions backing her and she had a safety net for her creditors. They were securitized investors. Okay, you wrecked average people. They're unsecuritized creditors to an exchange. And you took that money from exchange and traded it horribly. Another warning sign is SBF's meteoric rise to stardom. He was the chosen one, according to all the politicians, all the US regulators. When has a founder of a huge crypto project ever been truly, truly loved and embraced by the traditional markets? When has one ever been embraced by the SEC, Gary Gensler, and politicians alike? SBF was suspect in the fact that he was so close to all of these people and being so well liked by them. If you are truly crypto and believe in decentralization, that had to have some red flags attached to it. So moving right along, this is why I am a huge 100% believer in Twitter, and especially crypto Twitter. There is no better community out there than people who are on crypto Twitter. Yes, you have your people who are trying to get people wrecked. Yes, you have those terrible people who are moon boys. But the true people out there who are really trying to bring crypto to the masses and mass adoption, there's no better community out there. And why? We knew about a lot of these things happening even before the Wall Street Journal. We knew these things were happening in real time. There were Twitter spaces held about the hack. Immediately, get an alert. Everyone says, get off FTX. Do not open the app. If you have not withdrawn your funds, consider them lost. Do not open anything because FTX, there might be a hack and installing malware on your devices. All of this was happening in real time. Don't do this because crypto Twitter is actually telling us what's going on with this hack. Eventually, what happened is people were seeing their accounts frozen. Not only were they frozen from withdrawal, they were being drained. Accounts that did have access before, because remember, FTX is global. Not 100% of all the retail accounts were actually frozen. Some were still able to access funds and were in the process of trying to access those funds when this hack happened. So 400 million drained. Some say $1 billion, some say $2 billion. I remember waking up and the Financial Times was like $2 billion had been hacked. It's unaccounted for. But what we know for sure is on-chain analytics will show that it was a drain of 400 to 600 million. The wallet addresses were being tracked in real time. What's incredible about this is that on-chain analytics worked within the blockchain. And the reason why is they were able to track these funds, they were able to find out where they went, and Kraken actually reported to US authorities that they know the identity of the hacker. So after the dust settled, here's the sad part. Not only all the wrongdoing by SBF and all of his compatriots over at Alameda, somewhere in the Bahamas, it was also people, genuine, real people who were desperate to get their money off the exchange. You saw people doing things that you never in your life thought they would do. For example, some people were minting NFTs on the FTX exchange because somehow other people were able to buy those NFTs and they were cashing out for those people. And so what do I mean by that? They minted an NFT and they would charge a ridiculous sum for them. That person whose account was frozen from withdrawal was still able to purchase that NFT, and then that person withdrew the NFT money that they received and funneled it to the other person. I'm not an attorney. I don't give legal advice. I don't know if any laws were broken. The joke on crypto Twitter is that it is the first pure use case that in actuality worked out for an NFT. But because of this, there are some serious legal implications. They were desperate, and in desperation to get your money that you actually earned and was your money off in exchange, they turned to measures that people didn't even imagine they would do. And for instance, very famous trader. I actually liked him and followed him on Twitter, but what he was doing is he was offering people 6 figures to get him a KYC in the Bahamas. And the reason why he wanted a KYC is because, remember, FTX is an international company and licensed in many different countries. FTX Bahamas, for some reason, wasn't frozen. So you were still able to withdraw from FTX Bahamas. And so you had to prove that you were a Bahamas citizen. FTX US also, you were able, before the hack, you were able to withdraw. So because of that, people were giving bribes. They were saying, hey, somehow get me a KYC. I don't care what I have to pay. And after Algod posted that $100,000, you saw posting after posting after posting, a lot of them deleted by now, of $100,000, $150,000, $200,000 bribes to somehow get a KYC. Well, allegedly, he did get that KYC and started draining all of his funds. And then allegedly, I have to say allegedly because we don't know for sure, he actually started offering his account as a service, meaning that he was buying other people's accounts for 10 cents on the dollar. He would keep the 90% after withdrawal, and he would send them through another wallet 10% of that person's deposit. And this brings in a whole host of laws that are being broken. Immigration law, pretending to be a citizen when you're not a citizen, money laundering, right? Because you're taking people's funds and doing international transactions under a false identity. This is huge. And I just hope that a lot of people were spared from these crimes that were actually continuously being committed against users of FTX. So where is Sam now? This is why I love crypto Twitter, because it was tracking movements of wallets, funds, but also where Sam or SBF is and where Caroline Ellison is. What we know now, as of Monday, November 14th, this morning, is that SBF is in the Bahamas under house arrest and has actually been seen with his dad. Employees at FTX have actually confirmed that they've seen him at the store in the Bahamas. So I don't know how much under house arrest he actually is. And then Caroline Ellison is based out of Hong Kong. I haven't seen any confirmed sightings of her on crypto Twitter, but they're saying that they hope she doesn't get her chance to go to Dubai. Why? Dubai is the place where they have no extradition treaties. People were hoping that they do not get their chance to go to Dubai, and somehow they're stopped and apprehended by the authorities right where they're at. What's incredible is that crypto Twitter was putting out signs of where SBF could be, and his private plane was being tracked from the Bahamas to South America. It was the most tracked flight in the world while it was in the air. Luckily, he was not on that plane, and has been confirmed that he was actually in the Bahamas. So what's next? I'm incredibly sad for the space and why this is happening and how it all occurred. I think everybody is in a mourning period and is realizing how much they actually love crypto and blockchain technology and how we have to do better. We have to do better to keep the bad actors out and the good actors in. And we have to, unfortunately, in moving forward, work with regulators. In working with those regulators, we have to still protect the tenements of crypto. I don't know how much we're going to be able to do that in the United States of America. I don't know if we're going to keep things like anonymity, decentralization. I hope we do. The thing is that we're all hurting right now, but there is some light at the end of the tunnel. I think crypto has come together as a community, and they are going to fight back harder than they've ever fought back to make back the trades, to make back direct the money, to support each other, to come to developers' aids, to continue with projects. This space isn't going to die. It's just going to get stronger. That's evident in CZ hosting a Twitter space this morning, talking about how he's going to start a fund to be able to help other people who were wrecked, institutions who might have been affected by this very same failure of FTX. And I think that's very big of CZ. And we don't know where this is all going to end up. All I know is crypto Twitter, crypto space, blockchain technology, it's here to stay. Unfortunately, I think regulation is going to come hard and fast, and they aren't going to actually take the time to investigate and ask the appropriate questions in order to make our industry better. Gary Gensler, the next morning after the FTX failure on Bloomberg, was almost gleeful in his responses to the questions. I find that very interesting because he endorsed SBF, but yet he's very more than neutral, happy about being able to regulate the industry and bring better regulation to the crypto sphere. I also think what's interesting is that they relied so much on people who are in the for-profit space. I do think there needs to be a balance. You can do for-profit founders, people like SBF being able to testify. I don't think it should have been him necessarily. You're going to have to look to industry leaders within the nonprofit space too, because they might necessarily have different viewpoints on how to move forward, especially with miners, blockchain technology, and developers. For example, this tweet from Lee Bratcher at the Texas Blockchain Council, he very poignantly points out that regulators and politicians, they need to start looking where there might not be a huge financial incentive, because those people will bring good data, good analytics, and good viewpoints from people they're trying to represent. So what are some of the lessons that I learned? Because I'm not giving any financial advice here. Some of the lessons that I learned was self-custody. I'm guilty of it. I'm guilty of leaving some money on exchanges, thinking that, hey, I'm just going to wake up, jump into a quick trade, get out. What we're realizing is that right now it's such a tumultuous time that self-custody is really the only way to go. You know, you can look at different resources for how to self-custody. You can look at things, cold storage. That is a huge thing that I'm a believer in. That's why I think you're seeing exchanges struggle a little bit right now with liquidity. It's because people are pulling their money off exchanges. But you know what? After this failure, they have every single right to. And that leads us into also, what are the exchanges going to do? The exchanges hopefully will have a proof of reserve. They're going to be able to show their users that their deposits, what they're trading on, their accounts, are actually backed up by real assets. I think that needs to happen. And that needs to happen in a way where it's easy to understand, it's easily communicated, so people rebuild trust with the exchanges. Now that we've talked about some of the facts that have transpired up until this point, there's a lot of information and chatter out there going around about different theories of the role that FTX and SBF play in kind of reshaping the industry. And not only reshaping the industry, but are there political implications? Are there shell game of money implications with different countries and institutions? And you're going to see a lot of this stuff come out. I think it is very interesting. It depends on the bankruptcy proceedings, how open and transparent everything's going to be. The facts are the facts, and they're going to come out. And here are some of the things that we're looking at. So if you're not on crypto Twitter 24/7, staying up till 3 or 4 a.m. and only getting 2 hours of sleep, like most of us this week, you're going to start seeing some more information coming out, which is interesting. You could consider it to be possibly a conspiracy or possibly not, but there are some things that are coming to light that need to be known by the general public, I think. And one of them is that SBF has deep ties to being a Democratic donor. He was the second largest donor to the Democratic National Committee, only behind George Soros, which incredible amount, $50 million, I think the amount is last time we checked. You know, the other thing is that Caroline Ellison and SBF supposedly dated. We don't know if they dated for sure or not. But what we do know is that Gary Gensler worked for Caroline Ellison's dad when they were both economics professors over at MIT. So there's a connection there that needs to be explored. One other point is institutions that backed SBF, they did not come to save him. Goldman Sachs, they invested with him. They didn't come to rescue him. It's almost as if they wanted SBF to fail, and they wanted them to go all degen, leverage, crazy trading, and knew that they would fail. And what does that failure do? It brings a horrible spotlight on the crypto space. It invites regulation to come down hard. Interestingly enough, TD Ameritrade is in talks with launching their own crypto exchange, zero fee. BlackRock has expressed interest in acquiring institutional exposure to crypto. And just this morning, my friend sent me a text message that JP Morgan said that this whole FTX failure is actually going to be a better on-ramping experience for institutions to get exposure to creating crypto exchanges. We have to ask ourselves, are there any ties or are there any links? As an average normal person, I just think if the facts are out there, time will tell. We will see. In closing, I just want you to know my heart goes out to all the people who were completely devastated and wrecked by these jerks over at FTX and Alameda Trading. They're evil, they're corrupt, they deserve to be in jail. And I honestly don't care if they throw away the keys or not. I don't think you can reform people like this who decide to steal on such a mass scale. But what I will say is just in the past few days, I have never seen a community come together like the crypto community and the blockchain community has come together before. It's incredible. I have a love for crypto and the blockchain community. I have a love for the developers. And the reason is because when something goes wrong, they always come back and say, we're going to do better. We're going to build better. We're going to make back everything that was lost and more. And I have seen some of the best trading and technical analysis coming out, not financial advice, but I've seen some of the best educational content come out in just the recent few days. I've seen some of the best Twitter spaces, Twitches, broadcasts, YouTubes. The information is flowing, and I am just so grateful. We are still going to be here. Crypto's still going to be here. Blockchain technology is going to thrive. We will see another day, and we will be on top.
Like I was saying, it's FTX. It's a safe and easy way to get into crypto.
I don't think so. And I'm never wrong about this stuff. Never.